Welcome to Drumbeats, the must-listen-to podcast which explains why Indigenous partnerships are the key to securing successful outcomes in natural resource and infrastructure investment in Canada. I'm Mark McNackin, and my co-host Robert Brandt are joined today again by Aude Rajonson, Director and Head of Fixed Income Origination at the London Stock Exchange Group based in New York. Previously, in part one, we explored why the UK and Europe host over 90% of global sustainable bond fund assets and how LSEG's 400 billion sustainable bond market has evolved over 10 years to serve communities worldwide. In this podcast, we address the questions that matter most. How do you actually access these markets? Aude walks us through the preliminary steps debt issuers must take, from creating sustainable bond frameworks with advisors to engaging European impact investors through transparent storytelling. This is your implementation guide for accessing UK and Europe's concentrated pool of impact capital. If you missed part one, we recommend starting there for essential market context. If not, let's dive into the conversation.
So thinking about Indigenous communities and opportunities and issuers, how does an issuer go about? What are the preliminary steps you need to think about if you're going to tap into that market?
Yes, absolutely. So having worked with issuers for many years as part of the London Stock Exchange, but obviously in my previous life as a BCM banker, what we see that it's very important for debut issuers, and that obviously include Indigenous community, the debut access onto the international market is really to sort of familiarize themselves with investors and tell their stories. And part of the work for any new issuers coming to the market is really to educate the market about who they are and why are they contemplating accessing the market. And it's a process. It's a journey. It's really a journey of raising your profile internationally and be known. And the point with this is when they are ready to issue the bonds, investors are already familiar with the credit, they're familiar with the story. And so they can make an investment decision to place an order relatively quickly during the trade. So one step that issuers can do is a practical step really is through the creation of a sustainable bond framework that I was referring about earlier, with the help of advisors that have a dedicated sustainability team that would work and help issuers define eligible projects that align with ICMA principles. Those projects are based on the need of the issuer or the community and respond to the key issues that the specific issuer faces. So for the Indigenous community, it's really about identifying what are the most pressing issues that they face and what is the financing that they need in order to address those. And the purpose of a sustainable bond framework really is to identify where the proceeds raised with this bond will be used for. Whether it's environmental, social causes, and provide transparency to the investment community on where the money raised is going towards and what impact that money is going to have on the community, how the bond proceeds will be tracked, managed, and allocated. So it's really about creating transparency and accountability towards investors as to where the money goes. Now, when that framework is ready, steps that issuers can take is really to go and meet with investors that have a dedicated impact mandate to introduce the framework and talk about their plan. And what's going back to the point around international markets, especially for sustainable finance, something that's very important actually is the fact that Europe, as part of the international community, Europe is at the forefront of sustainable finance. So there is a certain level of awareness, sophistication, and appetite for social and sustainable issues in Europe. And in fact, Europe hosts almost 90% of global sustainable bond fund assets. So there is a high concentrations of impact-focused investors in Europe.
Great. Aude, we've discussed the benefits of international markets, the sustainable bond market platform, investor appetite, innovations, and practical steps. Bringing this all together, how do you see LSEG specifically position itself as the vehicle to connect Canadian Indigenous issuers with European capital?
Yeah, so maybe I wanted to take a step back a little bit here and talk about the way that we work as an exchange with our issuer base. And really, when I think about it, the way that we work is through building a long-term partnership with our issuer community through their journey to raise capital. And I'm going to use the line of the CEO of the London Stock Exchange, Dame Julia Hoggett. She often says that listing is not just for Christmas. And that really summarizes the value and ethos of our exchange. We build a long-term partnership with our issuers that goes in threefold: ahead of the transactions, during the transactions with the listings of the security, and on an ongoing basis. So if you think about it, the actual listing is a small part of what we do. So we strive to build an ecosystem in the debt capital market space where we collaborate with all key stakeholders, issuers, advisors, investors. And how we do that is by playing a role in educating issuers on the journey of raising capital. So we organize workshops and knowledge-focused sessions for our issuer community. We give a space and a forum to our issuers with the likes of thought leadership roundtables. And we support them in raising their profile on a global scene by celebrating their transactions. So closer to you, Mark and Rob, we celebrated milestone transactions and programs for the province of Newfoundland, or province of Saskatchewan, the province of Alberta. We host our annual Debt Capital Markets Forum, where we discuss the most sort of pressing topics in the debt space with the DCM community, and we give issuer the floor to speak. And some of the example of partnerships that we have is our work alongside the International Capital Markets Association and the issuer, the Islamic Development Bank, in publishing guidance for issuing green, social, and sustainability sukuk. So these guidance really explains the type of project that are likely to be issued to be eligible, and the steps that issuers need to take in order to issue these green sukuk instruments.
Very informative discussion about the role of LSEG. Rob, you've been on both sides of the pond now.
Yeah, I've, as I mentioned earlier, I've got fond memories of lots of capital raising in London over the years by Canadian issuers, debt and equity alike. And when we talk about infrastructure gaps in Canada and the Indigenous economy and the need for more private capital, Aude has explained well, one more tool, one more source of private capital in Europe, and listing on the London Stock Exchange in particular, the sustainable bond market is alive and well in Europe, and that's great to hear.
Yes, very good. So
the other question I'd have as a Canadian potential issuer is, that's great that there's a big sustainable investment community bond market in Europe, but I don't want to go to the trouble of listing. I just want to tap into that market privately and raise some money. How do you talk about the advantages of listing versus private? And is it a case sometimes that investors And I came across this when I was working in London. Some investors would say, I've got this much part of my fund. It's easier for me to invest in listed securities. And so if you get a listing, you make it easier for me to make my investment decision than if it's a private, especially when you're talking about a foreign issuer. Advantages of listing versus just raising money privately, just going to the sustainable investment community privately versus the advantages of, oh, it's a listed security in London that they're buying.
So I think the advantage of listing a security, and again, I think what's important to say is that one can list different type of instruments. So there's no real restrictions apart from the need for disclosure. But no matter what investors the issuer is going to target, there's going to be a need for disclosure. It's a market needs. And we go through, as an exchange, we go through that disclosure. I think the benefit of having the instrument listed is that a huge pool of investors require a listing as part of their investment criteria. So by having the bond listed, one issuer just ensures that he is able to tap into, to access the widest range of investor possible. And so as such, you could argue that more investors are able to buy the bonds, then better the price will be, the cost of funding will be for the issuer. We do see some private placements that get sold to just one investors that get listed on the market. But in the market, you also see private placements that aren't rated. It's not the largest part of the insurance, universe of insurance. Again, because the listing being an investment criteria for so many investors, insurers are usually better off having the security listed.
Yeah,
Great.
great answer. Can I ask one more? But just costs. So regulatory, there's time spent. You need to be in London, or Europe, talking to investors regularly. What about annual compliance costs with listing? If you're talking about raising 50 or 100 million dollars, say.
Yeah. So as a sort of a London Stock Exchange and obviously commercial organizations that we are, there obviously a listing cost, but it's a marginal cost when you think about the whole of the transactions. That includes your legal costs with your legal counsel, underwriting costs, and all of that, right? And so, as an exchange, we have sort of cost schedule that it's fairly advantageous for issuers, in a sense that we only charge an upfront cost, what we call an admission cost. So it's a cost to list the securities, and it's based on the size of the issuance with a maximum. There's a ceiling that they can pay. And there's no annual cost. So that's very advantageous for issuers, especially for those who look to issue sort of a long tenor, 5, 10, 20, 30 years bond, because we don't charge annual fees every year. So it's just an upfront one-off cost, and then that's it, really.
Oh, so practically speaking, what are the different steps for Indigenous people to take before accessing the market? And from your perspective, why is it important for them to raise the awareness of this approach?
So as part of the London Stock Exchange, we work with a lot of big new issuers. We've been working with big issuers for many years. And in my previous life, as a DCM banker, I brought many issuers, what we call debut issuers, into the market. And so what's important for debut issuers on the international market is for them to be familiar with investors and to tell their stories, but also for investors to be familiar with the issuers, the credit, the story. So part of the work for any new issuers is to educate this new market, right? This international market about who they are and why they're contemplating accessing the market. So it's a process. It's a journey of raising their profile internationally and being known by the investment community outside of any transactions. And the reason for that is that when the issuer is ready to tap the market, as a transaction's ready in the pipeline, markets are conducive, then investors are already familiar with the credit. And so they can make an investment decision to place an order into the trade relatively quickly. So one of the very first things that an issuer can do is to work with a set of sort of trusted advisors that will help them set up the creation of a sustainable bond framework. So it's choosing advisors of their choice, really, that will help them with putting together this sustainable bond framework. And what it means that they will identify eligible projects for the bonds that are aligned with ICMA principles. And those projects are based on the needs of the issuer or the community and are meant to respond to the key issues that the community or the issuer face. So for the Indigenous community, it's about identifying the most pressing issues that they face as a community and the financing that they need to be able to address those issues. The purpose of the sustainable bond framework and the importance of working on one with the help of advisors is to re-identify where the proceeds raised will be used for. What are the projects the proceeds will be used for, and to provide transparency to the investment community on where the money raised with this bond is going towards, and what impact is that money going to have on the community, as well as how the bond proceeds will be tracked, how it will be managed, and how it will be allocated. So it's about creating transparency and accountability towards investors as to where the money goes. Once this framework is ready, a step forward, sort of a second step that issuers can take is go and meet with investors that have a dedicated impact mandate to introduce that framework and talk about their plan. And the way that it can do that is really with the help of their advisors. Underwriters and banks have a syndicate team, and that syndicate team will have relationship with investors, including impact investors, and can help set up meetings for the issuer, whether it's in person, through different sort of locations where there's hubs for sustainability, whether it's the likes of London, across Europe, France, Germany, or it can also be virtual. That's easier and more convenient. But going back to the importance of international markets, especially for sustainable finance, is the fact that Europe is at the forefront of sustainable finance. So it's important to sit down in front of those investors because there's a certain level of awareness, of sophistication, and appetite for social and sustainable issues. And in fact, when you look at Europe in terms of stats, Europe hosts almost 90% of the global sustainable bond funds assets. So they use a huge concentrations, high concentrations of impact-focused investors in Europe.
Well, thank you for that explanation. I know our listeners and viewers will be very pleased with that short overview of how to succeed with the listing. And I think your reference to the importance of Europe will have a lot of relevance for them, because the issues the Indigenous peoples have in closing the infrastructure gap, there's a huge difference if you're an Indigenous person in Canada versus non-Indigenous. There's a huge gap there that is has been achieved, and there's still that gap, but it delivers clear social outcomes. So sometimes in Canada, you get lost in North America and look south instead of looking across the pond. So I think that story, Aude, will be very helpful. So once again, Aude, thank you very much for your time. It's been great having you on.
Oh, thanks again for being with us. Great to hear about the very active, sustainable bond market in particular in Europe. It's one more tool for Canadians and the Indigenous community in particular to think about when we look to close some of these gaps that we have in private capital. Will be a big need. And so thanks for explaining that segment of the investment community so well. Bye for now.
It's my pleasure. Thank you. Thank you, Rob, and thank you, Mark, for having me on this conversation today. That is really fascinating. And it's really about, it's very close to our mission of the London Stock Exchange to help communities grow and thrive. So it's been a pleasure talking to you both.
Thank you very much for your time.
Thank you to Aude Rajonson for sharing her insights with us. And thank you for viewing and listening. Mark your calendars for the upcoming 2026 summit taking place on the 8th of April. Be sure to share, subscribe, and leave a review on your favorite podcast channel. Thanks for listening to Drumbeats. Until next time.